Good morning, Victor. Thank you for joining us.
Morning, Chemisi. Thanks for having me.
Now, since the year started, we have seen about 6 corporate bonds issues from the likes of Flour Mills, FBN Quest, Dangote Cement, and so on, plus the very recent one, Lapo Microfinance Banks, that was a 6.2 billion naira bond program. What do you think is fueling these demands for bonds?
Well, like you mentioned in your introduction, we've over the years seen a crowding out, effects of the corporate sector by, government debts. But I think what you're seeing essentially is a reaction to the declining yield environment. Corporates always seek optimum and efficient ways to raise their financing needs. So if the yield environment permits them to raise money significantly cheaper than they probably would have maybe a year or 2 years ago, it only makes sense, for them to do that. And that's the reason you're seeing a flurry of issuances that you have seen so far this year. The environment is rife for that. It encourages that, and obviously gives great incentive for corporates to come and tap that debt market. So I think the declining yield environment creates a great incentive for corporates to continue to tap the debt markets.
Now, in terms of commercial papers, this appears to be the most attractive segment of the market lately. In fact, some companies have had to float bonds and commercial papers back to back. How significant is the low yield environment of this instrument for these issuers?
Well, I think for the commercial paper market, we've seen that actually rising over the last 3 to 5 years, when in 2016, total commercial paper issuance was about 114 billion. By the end of 2019, the total issuance was over 300 billion. Right now, year to date, we have over 200 billion, in commercial paper that has been issued. Again, the dynamics within the yield environment, which essentially allows corporates to be able to take care of their short-term financing needs at a significantly cheaper rate that they probably would have been able to a couple of years ago. So it really just makes sense and gives corporates great incentive to take advantage of this low yield environment. Like you mentioned, you've had some corporates issue commercial papers, and I've also gone ahead to issue bonds as well. So there is great incentive for them to continue to tap the local debt market and also the local money market to be able to raise funds as cheaply as they can. So again, I think that the declining yield environment and also the sort of amount of liquidity within the system that is looking for instruments, that paucity of instruments as well, creates a great incentive for corporates to be able to come out and raise money at these levels at this time.
Now, but won't some of the listed companies consider offering like right issues or even private placement instead of commercial papers?
I think the challenge with that has been the state of the equities market, or what you might describe as investor appetite towards risk assets or equities. Over the last couple of years, really, that has been subdued or been on the decline. We've seen some flashes of recovery here and there in the market, but on a sustainable basis in terms of how investors perceive the risk in that market, it's not been strong for a couple of years now. And that's the reason a lot of corporates would shy away from doing a private placement or even looking to the equity market to raise funds. We've had some right issues, a number of right issues over the last couple of years, but I think that the preference really right now is for the debt capital markets because of all the kind of liquidity that is in there, the paucity of instruments in there, and of course the sort of risk averse nature of investors towards equities at this time makes it preferable that these funds are raised in the debt markets.
We know so far about the performance of the commercial papers on the secondary side of the market at the FMDQ exchange?
Well, I think that's one of the challenges that we've had with, corporate bonds and even commercial paper issuance. It's always been around, that price discovery and liquidity in secondary market trades, if you will. Because of the size of the issuance there, it's typically not very liquid. and such that it doesn't easily trade. Most of the trades that you probably have there are essentially OTC trades. So price discovery remains a bit of a challenge, and I think the reason for that is the seeming illiquid nature of these corporate issuances. But I think that as you have more corporate issuances, and as you also have corporate issuers create a bit more liquidity in the papers that they issue, I think that situation should improve, and then we should have better price discovery going forward there.
Well, speaking of the offers to investors, they are more targeted at deep pocket investors or high net worth investors, usually at a minimum of about 5 million naira per subscription. Now, except for that of MTN, which was offered at a minimum of about 1 million naira. What can the regulators do, to make this instrument participatory for retail investors?
I think if we take a cue from what the DMO has been able to do with the federal government bond, particularly the creation of the federal savings bonds, I think that we would be able to draw lessons to see that in terms of a structure, market structure that can be created to push this sort of instruments to retail investors. The structure is there. I think that in terms of regulation, maybe the regulators need to come out with a framework that enables issuers to be able to extend these instruments, to retail investors via some sort of structure that would enable retail investors to participate. Because again, that retail investor market is quite significant. It is quite large. And I think it is important that they be exposed to such investment vehicles as they come out.
It also appears that the commercial papers are more of the FMDQ exchange and not available on the NSE. Is there any reason for such limitation?
Well, I think it probably has to do with some maybe listing requirements. I would also believe that the NSE is in constant communication and discussion with these issuers, because at the end of the day, it is important that these issues are liquid and tradable, particularly from a secondary market perspective. That would serve to significantly deepen the capital market and also provide investment outlets and opportunities for investment funds and also retail investors as well. So I want to believe that there are discussions in the works to ensure that this situation is taken care of, and a platform for retail investors and for the tradability of these securities is made available.
All right, now, given the reemergence of liquidity challenges in the financial system lately, what are the chances that issuers will not default in redeeming investors' principals at maturity?
I think the issue with or the challenge with issuers, meeting up those payments would essentially be around, the broad macro situation. For instance, what we've had for the first half of this year with the whole COVID-19 pandemic and its attendant impact on, the economy would certainly speak to, stresses, particularly for some of these corporates, and obviously could have some impact on their ability to meet those interest payments or even the principal payment at maturity. But again, I believe that there is room for some sort of negotiation in those areas, particularly with the creditors. So clearly, I think, the ability for issuers to repay pretty much is dependent on what is going on with the macro situation. For issuers who probably have their maturities coming up in 3, 4, maybe 5 years from now, I think that barring any significant economic contraction or any other black swan events from the global economy, we think that they will be okay. But for those that probably have redemptions or close by, they might have to do some sort of renegotiation with the creditors. But I think it's the macro situation that would really determine that, not so much around the sort of liquidity that you have in the system, because that is basically tied to the performance of the companies and how they are able to generate the returns and also get the funds to be able to pay back when these papers mature. So I think it's really tied to the macro situation and not so much around liquidity.
And with inflation accelerating at double digits at yields on the commercial papers, net single digits, do you see anything changing in the second half of the year?
Well, I think, for the second half of the year, a lot is really dependent on the developments on the COVID-19 front. There have been talks or indications of a likely second wave or the reemergence of a poorly managed first wave. I think a lot depends on how significant that would be. If we see cases continue to rise and we see governments lean towards reinstituting restrictions on the economy, that would have a significant impact on the output growth for the second half of the year. However, if we're able to manage the situation as it is now into the better part of the rest of the year, I think we will see some gradual improvement in output and by extension to the general economy. So I think a lot depends on what happens on the COVID-19 front, really. But in terms of the local market, the amount of liquidity that you've got coming through again will play a significant role in driving those yields. Inflation is where it is, but I think what is happening right now is you have a significant paucity of instruments and you have quite a lot of money looking for outlets. So that will continue to drive those yields, downwards in our view for the remainder of this year.
All right, thank you very much, Mr. Aluyi, for your time. Victor Aluyi is the head of portfolio management at Commercial Partners Asset Management. Thank you for your time.
Thank you.